This is a sign that the market is changing. And if you're a buyer, you need to be very, very careful on how aggressive you put in offers on houses. What the heck is going on in the Omaha real estate market? That's what we're going to be talking about today as we move into the spring and summer months. We've expected the real estate market to begin to slow down, yet it's not doing that, but all the signs are pointing towards the real estate housing market to begin to decline. So what can we expect? What do we need to look at to really give us a good understanding whether we're a buyer or a seller? How do we make sense of this? That's what we're going to be talking about in this video. And to start out, let's take a look at some of the charts. So what we're looking at here is the average closed price for existing homes here in the Omaha metro area, which includes Douglas and Sarpy County. And there's a couple things that I want you to know. Every year we have highs. Typically they are the June and July. That is when we hit our peak. And then we usually hit the lows in the fall and winter months. So we have these peaks and valleys that go up and down, up and down. As we transition from a seller's market to a buyer's market, we're going to begin to see these transitions shorten. They're going to get smaller. We're going to get lower highs and we're going to get lower lows. These are the months of February. And if you take a look at this, we're going to see this arching and flattening out of the graph. And that tells me that we're beginning to peak. We're going to start seeing those lower highs and lower lows. Now, as we move into the spring and summer months, we are going to see this spike in activity, a spike in home prices, and spike in volume, simply because the months of April and May have the most volume out of any other month of the year. I say that because if we take a look at this graph of new listings coming out on the market, these lows are December. That is the lows. And then we see this spike back up in the number of listings that are going to come up on the market. Even though we're seeing the fewest number of homes that have been listed this past December, we're going to see a spike in inventory. Now, it's probably and potentially could be less than we've ever seen before, and here's why. There is more homeowners than ever before that have lower interest rates than where interest rates are today. And because of this, a majority of homeowners would rather wait, sit, and not do anything, because if they sell their low interest rate right now, they're going to buy into a very high interest rate. This is causing sellers to reconsider selling their home and instead just wait things out. Now, the previous graph that I showed you was just existing homes. This graph right here includes new construction. And if we take a look at the monthly supply, we're going to see that as far as existing pre-owned homes, there is less than 2 months supply. In some cases, around 1 month of supply. But if you take a look at new construction completed homes, you see this huge increase in inventory. And this is because builders, back when there was so much low inventory, did everything they could to develop land, start building on project, and now we're seeing a slowdown in the number of homes sold. The other thing is that new construction tends to be higher priced. So new construction starts around $300,000. That's D.R. Horton Homes. And it goes up from there to $500,000, which is typically what you would get for a semi-custom home here in Omaha, Nebraska. Homes under $300,000 is a very aggressive market still, and will probably continue to be that way for some time. Even as interest rates rise, we're going to see this demand for inventory this spring, and we're going to see multiple offer situations. Let's take a look at another graph here, and this one is pending sales. If we take a look at this, you're going to see not just the ups and downs of the market, which these are seasonal. The highs and lows right here, those are the slow months, typically the winter time, and then we have the active times, which is the summer months. But look at this trend down right here. Or we look at the high end during the summer months. We're seeing a decline. If we continue this trajectory during the summer months, we are going to see this spike, but how high are we going to see it? My guess is we're not going to see it last year's highs. We're not going to ever get to that point this year. It would be a miracle in my opinion. two reasons. We have rising interest rates and we have less inventory. Because of that, we won't have the amount of inventory we need to potentially reach this number of pending home sales. Because we have homeowners that don't want to sell their home because they're going to get screwed on a higher interest rate when they go buy another home. This right here is another fascinating graph. This is showing time showings per listing. This basically means how much foot traffic, how many showings are being scheduled on showing time to be able to see properties. This is extremely interesting. These are the months of February. And we're seeing a drastic decrease in the number of buyers looking at homes. So even though we're still seeing a very crazy seller's market right now, look at the difference between this year and last year. We're seeing a decrease in the amount of showings. Now, we're still, because this number still is high, we're seeing competition, but it is nothing compared to last year. This is a sign that the market is changing. And if you're a buyer, you need to be very, very careful on how aggressive you put in offers on houses. Now, the key factor in all of this is where interest rates stay. If interest rates go down, we're going to get aggregate demand. We're going to have this influx of buyers coming back in on the market. If interest rates stay high, we're going to see it begin to plateau, flatten out, and see the real estate market begin to decline as is expected. So we'll see what happens with interest rates in the next couple months. If they stay above 7, that's the number I'm looking for as the threshold for market activity. If it goes down, we're going to see an increase in buyer activity. Now, if you're a buyer watching this video and you want to buy a house, I'm going to go over some details on how you can make a very strong offer in this market without blowing your offer out of the water. Here's a couple things. Okay. Number one, if you're not doing an asking price or higher offer, you're not going to have a chance. Number two, if you can go conventional versus FHA, you're going to have a better shot simply because FHA has more restrictions and conventional means typically that the buyer is better qualified. Having more cash is always a good idea. If you just have enough cash for your down payment and some of your closing costs or barely any of your closing costs, you're not going to have a very strong chance of getting your offer accepted. You want to have an abundance of cash, and the reason for that comes in number 4. Appraisal gap coverages. And this comes into what the home appraises for. If, for example, if the house is listed for $220,000 and you put an offer for $230,000, that $10,000 gap could be the difference of what it appraises for. If it appraises for $220,000 and you offer $230,000, an appraisal gap coverage says to the seller that, hey, Mr. Seller, I'm willing to cover the difference between $230,000 and $220,000 in case it does not appraise. No inspections. Now, nobody likes this. I don't like it. But if you're looking for a house that is in ill repair, I would not be doing any of these strategies. The only way I do no inspections are on newer properties, typically 2000 or newer, and we're still looking for stuff when we're doing our walkthrough to see if this is an actual property that we can put an offer on without an inspection. If it's not, then we don't put an offer on it. But homes without a home inspection are going to have a greater chance of getting accepted against multiple offer situations. A non-refundable deposit. A non-refundable deposit says to the seller that, hey, I'm not going to walk away halfway through this transaction. And if I do, my deposit is yours to keep. Now, this money is actually going to go into your pocket after you close on the house. It is not actually money you're handing to them. It's only there if you walk away from the deal. So if you're confident that you want this house and you're not going to walk away mid-transaction, then this is a great way, a free way that you can make your offer stronger and not actually cost you more as a result. A seller preferred closing date. Now this is down on the list, but if you make it convenient for a seller to move out of their home, it makes your offer more desirable. And in line with this is number 8. Post-closing occupancy. This basically says to the seller, hey, you can move out when you want. And to make it more convenient for you, after we close on the house, we'll give you 48 hours to get your stuff, clean the house, and move so that you can get the money from the sale of your home and buy your next house. Because it is very difficult to sell and buy a home on the same day, and this post-occupancy agreement allows it to be a smoother transition, and it is actually something sellers really like. So if you can put that in your offer, you're going to have a better opportunity to win. An agent that asks the right question. And the reason I put this in there is you can have the best offer, a strong offer. You can have more cash, you can have the appraisal gap coverage, you can have no inspections. But if there are other offers on the table and you don't know how to ask the right questions to the realtor, then you could have a very close offer but still end up without a house. What if it was just $1,000 difference? And if your agent asked the right questions to give you the opportunity to win, you could have a house. Your realtor is the most valuable part in this whole process on knowing how to negotiate the terms, negotiate against other realtors to make sure you have the best chance to win a house. So all of these guys, if you use these, you're gonna have a better chance of getting an offer accepted in this crazy seller's market. But be careful if you're a buyer. If you're going to buy a home and you're only gonna be there a couple years, I would highly recommend potentially not buying a house right now and renting until the market begins to level off and you're not paying ridiculously high above the asking price. I do want to add one more note here. This is going to mostly be in effect for $300,000 homes and below. If you're potentially bidding on a house above this amount, then you will not need to use these items because there's not going to be as much demand, not much as activity, unless it is a 9 out of 10, 10 out of 10 home. It's decked out to the nines. It's beautiful. Those homes still get a ton of activity because everybody wants a beautifully looking house. So just keep that in mind as you're going through and potentially putting offers on homes. Lastly, if you're a seller, I believe the writing is on the wall. The market is changing and the window to get your premium price on your house is beginning to close. Is it going to close today or tomorrow? Probably not. Is it going to close in a couple months? I personally think that could be the case. Or it's going to begin to level out and you're not going to get those multiple offer situations, which that puts you as a seller in the best possible situation. If there's only one offer on the table, guess what you have to negotiate with? One offer. And typically one offer offers get below asking price offers. And that means you go down in your price. So if you have any questions at all, guys, please reach out. You can find my information down in the description. Thanks for watching, guys, and we'll see you in the next video.